Hey guys, today is fun. It's day 10, guys. We're almost at, we're literally a third of the way through this challenge, which is insane. It feels like I just started it yesterday. And I think we're actually starting to get better. Pauses are taking up less of the time, and I'm not using so many filler words, so that's great. But yeah, it's been a lot of fun. And I want to talk about something pretty cool today. But first, like and subscribe. It really helps out a lot. I'm sitting at 100 subscribers, which is awesome. Thank you guys so much. Let's get to 500, guys. Let's get to that goal. So, you're an entrepreneur and you're trying to start a business, and you're really good at running a business. You're really good at getting things done properly. You're good at organizing things. You're good at you're good at the business side of things. You know what you're really bad at? And this goes for me too. You're really bad at bookkeeping. You're really bad at accounts. And that's a problem. You know why? Because taxes, especially if you have any kind of successful business at all, taxes are going to take a lot out of your paycheck. Especially as a self-employed person who owns a business, the government loves that because they get to take a little extra cut for themselves. And this isn't a very fun subject, but it can be exciting, and I'll tell you why. You can talk about anything. I can talk about this lampshade, and you guys would find it interesting. And I mean, you look at this lampshade, and you don't think it's all that interesting, but it's got these like streaks in here, and you're like, man, how did they sew that? Because they must have done something cool about it. There's these little extra lines that are like thicker, and it's like, man, did they use a special machine to get those lines? Why are you listening to me talk about a lampshade, bro? So let's talk about taxes. If I can make a lampshade, I can make you listen to a lampshade. You can listen to me talk about taxes. First of all, there's a book you should read. Yes, it's the Bible. By the way, Bible gives you some great financial advice. Very smart. Don't be a certainty for your friend. Don't get signed into contracts that don't actually benefit you. Big one. Proverbs. Look it up. This book does work on Canadian taxes. It does do a little bit with like American stuff as well, but it is a Canadian author. I'm from Canada, so this is the book I read. Make sure it's deductible. It's the 5th edition. They keep updating it, so it's updated with the tax laws. This one was updated. When was this updated? This one was updated 2020, I believe, or 2022. I think this was updated in 2022. So like 4 years ago, which isn't bad. They're probably coming out with another updated one soon, but this book is insane. It's so full of information for for small businesses. It tells you how to take control of your relationship with the CRA. It helps you claim all your available deductions and credits, and it maximizes your after-tax income and wealth. And that's super important. I've seen it all too many times where you have a business, you're running it, it's going really well, and suddenly you have insane tax debt because you weren't expecting to pay a lot of taxes. And as an employer, your tax kind of automatically comes off of your income, but it doesn't. That's not how it works when you have your own company. Quick little story about myself. My employer messed up the taxes, how my taxes were being done. So I was actually like, my taxes were not getting taken off of my paycheck, which was kind of a massive issue, and but thankfully I made like $30,000 that year, so it was pretty much nothing. I paid like $5,000 in taxes, maybe $6,000, but that was like a big chunk of taxes to suddenly come around. And I'm like, whoa, what's this $6,000 bill from the CRA, right? CRA stands for Canada Revenue Agency, by the way. It's kind of like our I forget what the American tax system is, but it's like that. And I was like, what is this big tax bill? It's only $5,000. I did some extra work. I got an extra job for like 6 months, and I managed to pay it off, no problem. Thank you, God. But I've seen it happen where suddenly a business, they make like $100,000 in a year, and they're like, oh, sweet. And then they find out they got to pay $45,000 in taxes. They've already used all that money. That money's gone back into the business, or it's gone back into other things, or it's gone back to providing for your family. It's like, what am I going to do? What am I actually going to do? And the thing I would encourage you to do is read books like this. Figure out, what you can deduct. Start making a note of everything. I'm terrible at saving tax receipts, or I have been in the past, but I learned, hey, every receipt, every purchase you make, save that receipt. You need them. You have to have those receipts, man. They're very important. If the CRA audits you and you don't have proof of the write-offs you've written off, they're going to charge you for that. And they want to charge you for that because they're a government system and they want the extra money. I mean, it's not like they're using it for anything useful, but they will come after you. And the thing is, you want to have a good relationship with the CRA. I want to have a great relationship with the CRA. I'm not trying to commit tax fraud. I know there's people who are like, oh, I can get away without paying any taxes. And it's like, okay, cool, bro. Enjoy your life, right? Like, there's so much extra stress with that. It's like, I'd rather pay the taxes, have a good relationship with the CRA, and just make so much freaking money that it doesn't matter. You know what I mean? And I know it's tough in Canada. Move to Puerto Rico if it's really bothering you. Move to Dubai if it's really bothering you. If you can't move to Dubai, start an online business. It's not that hard. It's so easy nowadays. You'll probably make more doing that anyway. So enough of that little rant. You need to get an accountant. Number one thing, go sit down, have a meeting with an accountant, figure out where you're at and your goals and your plans. They can also tell you if you're ready to move it into move your business from a sole proprietorship into a corporation, etc. Sole proprietorship is just when you're kind of like the owner and operator and you're running everything. A corporation is where the business is actually a corporation and you get paid a salary or you get paid dividends or whatever out of the corporation. It's better for tax purposes, but you don't get taxed on the money that you leave in the corporation, or it gets taxed at a much lower rate. But the problem is you can't like take money out. So if you're using all the money you're making, probably not worth it for you. But there's a lot of things you can do to make sure you're being careful and you're prepared for when you have to suddenly pay a lot of taxes. And so young entrepreneurs, listen up, because this does affect you. Get an accountant. He can go through your stuff and kind of tell you what you're doing wrong. Get a bookkeeper. You need a bookkeeper. They can organize your books. They can get everything sorted out so that all you have to do at tax season is just give your books to an accountant. They take a look at it and they give it to the CRA and it's all there, it's all done, and it's beautiful. But there's some things you need to do yourself. One thing is track your business expenses. Be very careful with your business expenses. Make sure you have them all recorded so that you're actually writing off as much as you can. A lot of people don't write off everything they can. And the problem with that is you're losing money. The way a write-off works is you give money. You pay for a business expense. The more your business grows, the more it should make, theoretically. The more your business makes, the more money you're giving to the government in taxes. The government wants you to give them more money in taxes, so they're going to want you to grow your business. So to help you grow your business, when you pay for something that your business requires, they're going to let you deduct that from your total income for the year. So when you go to pay taxes, you're not paying, let's say you made $90,000 and you spent $10,000 on business, like business travels, gas, things like that. Now it shows up to them that you only actually made $80,000. So instead of paying a 35% tax on $90,000, you're only paying 35% on $80,000, which is way nicer, right? You need to be doing that because it's saving you money. Other things like doing things to help you deduct taxes, like deduct more money. So if you have a trip that you have to take somewhere, like let's say you got to travel, for me, I got to travel down to America for something. Try and make it a business trip. Try and meet someone there for business. Whatever you can do that you can write off the gas that way. I mean, you got to keep, so when it comes to vehicles, keep strict logs. Write down everything, keep your mileage, keep your what you did on the trip. If you go and have a meal, I think you're only allowed to deduct 50% of a work meal, which is like the other person's part of the meal. You're not actually allowed to deduct it for yourself because you would have eaten anyway. So make sure you write down, okay, I went to lunch with so-and-so and we had this for lunch and it cost us this much. And then your accountant's going to be able to use that to deduct it off of your taxes. Every little thing matters. It sounds a bit like penny pinching. It's really not, because if you're careful with your accounts, you're never going to have to be stressed about paying a ton of taxes, and you're always going to be able to come away with tax season with a little bit extra. And what I mean by a little bit extra is this. If you're not doing this, you are killing yourself, okay? every time your paycheck comes in, as someone who's self-employed or owns a corporation, you're putting aside 30 to 35% of that paycheck instantly, no questions asked. 30 to 35% of that goes into an account that you cannot touch no matter what. What I mean by that is you have a bank account, you open a separate bank account, you open a savings account in that separate bank account. You do not have a card for that bank account, okay? Your money comes out of your bank account, your original bank account, you send it over to the other bank account, to the savings account, and you do not touch it. It doesn't matter. That money is gone. It's like it never existed to you. It's like it's dead. It's like it's gone. It's like you never had it. It's like it got burned in a fire, okay? And I'm going to tell you why. Because that money is your tax payments. That 30% is your tax payment as a sole proprietor. If you charge GST, so if you're providing a service for people, you add another 5% on top of that. So it's 30 to 35%. I would do 35% just in case, because most people are going to be charging GST. You put that money aside and you forget about it. I got expenses. I got rent to pay. I got all that stuff. And you know what? I got a bank account with like a crap ton of money in it, but I'm not touching it because when tax season rolls around, that money all goes. That's not your money. It's the government's money. And if they don't have their money, they're going to be ticked. They're going to be pissed off. They want your money, man. So they're going to charge you. And the crazy thing is there's interest, okay? It's not just that you owe them money. You now owe them money with interest. So you're going to start paying interest on this $40,000 that you don't actually have while you're trying to save money for the $40,000 that you don't have. And this is all while in a year you're working, okay? So imagine this. You didn't pay your taxes off, so now you're working to pay them off, but you're in a new year that's also going to be taxed. So now you got two choices. You can either work to pay off your previous year's taxes that you're now getting charged interest on too, which you need to. It hurts your credit, it hurts everything. You need to do that. And take another additional 35% off. Okay, so now you're taking 70% of your income and putting it straight into taxes that you cannot touch. That leaves you 30%. 30% of your income. Okay, now take another 10% off of that if you're a Christian. Now you have 20% of your income to live on for the year. That's insane. As a single guy, you might be able to do it if you don't have to pay too much rent. As someone who's married with a family, you're in trouble, man. You need a bit of a miracle to get you out of that. Okay? And if you don't, right? If you don't take that extra 30%, 35% off for your next year's taxes and save it, you've now put yourself in a spiral where you're going to be paying extras for years until you can pay off your years in behind you that you're needing to pay taxes. And this is like I know situations where this has happened. It's hard to deal with, man. You need to be on top of this with your business before that happens to you, because it's a lot harder and it's just completely unnecessary. It's an unnecessary extra struggle if you take the time to look into things and really study things before you just, oh, I'm a business person and I'm an entrepreneur and I'm going to go do my own business and it'll all be great and fine. It's like, whoa, hold on now, buddy. Yes, you're great at business. You really suck at looking after your accounts because you're a business person. Dude, there's a reason we have accountants and bookkeepers. There's two separate careers, accountants and bookkeepers, to take that side of things. And you're like, oh, no, but I'm an entrepreneur and I can look after it myself and no problem. I got it. It's like, hold on. So now you're doing 3 careers. Okay, you're running your own business, which really is like 2 careers in one, because it's a lot harder than just being an employee. You're putting in way more hours. You're probably putting in 80-hour weeks, not 40-hour weeks. So you have 2 careers right there, essentially. Now you want to be accountant and bookkeeper as well. Bro, those are both additional careers. Now you've got 4 careers that you're trying to run, and you're like, oh man, I don't understand why my books are in such a mess. Well, that's because you didn't take that extra $100 and just pay someone to do it for you. It's very, very unbelievable. And the thing is, you do have to be careful. You do have to do a lot of stuff yourself. That's why you read books like this. But man, don't be like, man, my accounts, I'm bad at doing accounts. It's just the way it is. I realize I'm bad at doing accounts myself a lot of the time. I'm working on it, but you know what? I'm going to be paying a bookkeeper to take care of my accounts. It's the smart thing to do. And that way I don't have to worry about it and I can realize that I'm saving more money, okay? Don't get yourself in a situation where you're now stuck because you didn't do the smart thing and save that tax money. You want a good relationship with the CRA, and you want to protect that relationship, and you don't want to be paying extra money for the rest of your life because you made a mistake. And now obviously, even if that does happen, okay, or you are in that situation, you can get out of it. It's not the end of the world. Save money, put money towards it, do everything you can. Do everything you can. That's the first thing you pay off. Focus on that. Get rid of it. It's going to make your life feel a lot better. And you will be able to do it. And you will be able to get out of that and you'll be able to be successful. And I know this is like a pain point for a lot of people because it is like something that does happen. But just know that there are easier ways to deal with this. You need to have these things in order when you start your business, not halfway through, not at tax season, not when the accountants and bookkeepers are all insanely busy and can't help you anyway. Get this stuff in order. I started my business in February. I was meeting with accountants in June. I was meeting with bookkeepers in August, okay? Tax season isn't until December and then next April. Get ahead of the game, start meeting with people so that you are not screwed over when tax season rolls around. Anyway, that's my rant, and that's it for now. I don't want to yell at you out too much, so yeah. Hopefully that was helpful, and drop a comment in the comments if you did find that helpful, and go see how many verses about finances and how to deal with your finances you can find. It's a very interesting study. Highly recommend it.